China's technological advancements have been nothing short of remarkable. From artificial intelligence to advanced manufacturing, the nation has made significant strides in various sectors. But how did China manage to achieve such rapid progress? DeepSeek terrifies the West. Has China surpassed technology? The DeepSeek artificial intelligence model has led to a frenzy in market sales due to the extremely low cost at which it is supposed to be trained, amounting to $6 million compared to $100 million for its most famous American competitor, ChatGPT. It seems that the Chinese, who have been restricted by American sanctions from using more advanced semiconductors, have found a way to achieve a similar result using much less expensive electronic power, indicating that American chip companies may be greatly overvalued. But it is believed that the $6 million does not include the costs of infrastructure, pre-purchased chips, the ability to learn from the results of open-source models produced by competing companies and possibly stealing data. However, this technological boom is still a strong blow to the American psyche, and raises the question of whether China has caught up in various advanced technologies, or even surpassed the West in many areas, according to a report by The Times. The world's largest producer. In 2023, the Information Technology and Innovation Foundation, a U.S. think tank that tracks innovation using a measure called the Hamilton Index, found that China was the world's largest producer in 7 of the 10 strategically important industries it tracks. China leads in areas as diverse as battery manufacturing, optical fibers, machine tools, turbines, chemicals, and metal production and forming. It also leads the United States by 10 to 15 years in its ability to deploy new nuclear power, has the largest market share in advanced electric vehicle production, is close to parity with the United States in robotics and artificial intelligence, and is only about 18 months behind South Korea in display technology. The only areas in which almost no country other than China is ahead comprehensively are pharmaceuticals, advanced semiconductors, and quantum. But even there, China has the edge in some niche areas. These assessments may already be outdated. How did this happen? These astonishing advances owe much to Made in China 2025, a decade-long project that is now nearing its end. This project is clearly in keeping with the old Marxist doctrine of owning the means of production, and is based on Deng-era ideas about domestic versus foreign markets, and on early 2000s doctrines about going out and investing abroad. But it is also something new. After the 2008 financial crisis and the 2013 Snowden revelations about U.S. surveillance, and after realizing the full potential of exporting furniture and slippers, Xi Jinping decided that it was time for China to move up the value chain and rely less on foreign technology. He listed 10 industries that China was set to dominate, such as railways and green technology, and set a deadline. Recruiting experts. The government created huge science and industrial parks, complete with schools, colleges, clinics, affordable housing, transportation, and so on. It recruited foreign experts and equipped their Chinese subordinates or students to learn from them. It commissioned high-speed rail lines and, with the unwitting help of European companies like Siemens and Alstom, set up its own domestic railway companies to supply them. It funded research centers at universities and directed students into related fields. It has also created several guidance funds, a kind of public-private venture capital with return targets to build its own semiconductor industry. While foreigners have ignored, then ridiculed, then condemned these policies, the salient point is that they have worked. China is a successful economic model, that is, it has operated on its own terms. It has captured global market share, defied dissenters, and pushed many Chinese industries to the edge of the pack. But that doesn't answer the question of how profitable it has been or whether the whole model is sustainable. Beyond the success of Made in China, there is an economy where debt has grown faster than GDP for a decade. The population is aging at a record pace, and the government is still propping up a massive bankrupt real estate sector. China's successful industries are not just racing with the West, they are also racing with its own economic decline. Beijing may be more self-sufficient and more dominant than ever in global trade, but how long can the whole model continue to lose money before enough is enough?